mortgage rates, but mortgage spreads are right now 360 basis points higher than the 10-year. Historically, it's 1.6 percentage points, so you could see a huge drop in mortgage rates. That's going to help housing, helps the financial small caps, and I think already the ISM, which has been below 50 for almost 30 months now, could finally go back above 50, and that's a good sign for industrial.
Friday, Jerome Powell, the head of the Federal Reserve, hinted that the central bank might be prepared to make its first rate cut during President Trump's second term. Powell cautioned during the Fed's annual Jackson Hole Symposium that given the labor market's stress indicators and the increased likelihood of layoffs and unemployment, existing policy may be impeding growth. He cautioned that there are increasing negative employment risks, which could manifest as abrupt layoffs and an increase in unemployment if they do occur. In response, he said that in order to support the economy and boost activity, the Fed may need to shift its policy position, particularly by decreasing benchmark rates.
Fed acknowledging that the risks now are tilted for the labor market to be softening, and they want to head that off, especially because they don't think that tight labor markets are going to necessarily create inflation. That's a very good sign, and I think it means we have a dovish Fed again, and that's kind of a green light for small caps. Yeah, because I think that one of the things we should watch for is what happens to mortgage rates, but mortgage spreads are right now 360 basis points higher than the 10-year. Historically, it's 1.6 percentage points, so you could see a huge drop in mortgage rates. That's going to help housing, helps the financial small caps, and I think already the ISM, which has been below 50 for almost 30 months now, could finally go back above 50, and that's a good sign for industrial.
Markets reacted immediately, with cryptocurrency at the epicenter of the upswing, although Bitcoin saw an almost 5% increase to $117,300. Ethereum was the true star of the show as it broke its previous record high for the first time in almost 4 years. In a single day, Ethereum surged over 15%, hitting $4,885 on Bitstamp and emphatically surpassing its record from November 2021. Ethereum has a 74% chance of hitting the $5,000 milestone before the end of August, according to several market analysts, with some even speculating on a spike to $5,400 in the last few days of the month. In the long run, there is a 16% chance that Ethereum will reach $10,000. In 2025, a growing belief that Powell's dovish stance may spur fresh liquidity and establish Ethereum as the frontrunner in the upcoming cryptocurrency rally. Tom Lee of Fundstrat has added to that momentum by arguing that Powell's move may open up even more opportunities, particularly for cryptocurrencies and small-cap stocks. In his most recent view, Lee, one of Wall Street's most outspoken proponents of Bitcoin and Ethereum, speculates that the current rally may only be the start. His analysis helps outline potential future market movements and the reasons why cryptocurrency investors should be closely monitoring them. Stay tuned as we dissect everything. If this analysis is helpful to you, remember to hit like, subscribe, and enable notifications so you don't miss the remainder of the video. In a post on X immediately following Powell's Jackson Hole address, Lee reiterated his stance, saying, "Fed Powell dovish equals 2 green light for small caps, Bitcoin, and Ethereum." To put it another way, Lee believes that the Fed's more lenient approach is a direct cause of risk on assets, with small cap stocks, Bitcoin, and Ethereum at the forefront. That statement, which comes from one of Wall Street's most reliable bulls, highlights how crucial Powell's move could be in determining the course of the cryptocurrency rally's next leg.
Because growth expectations are improving as well, so this could be like what I'd call a bull steepening. I'm not really sure what the fixed income terms are, but I think it's actually a positive sign for growth. Been getting defensive, that's why we've been bleeding for 5 days, and so now I think there's a relief and some capital gets put to work, and it's good for equities and risk assets. Especially because, once you get an ISM back above 50, it really does argue for a broadening of markets, and I think one of the leaders probably comes from the financial sector. So I think, towards the end of the year, 6,800, 7,000 is possible.
Led by tech still?
Yeah, so I think you still want to play
this week.
Yeah, you want to be long AI and the crypto trade because those have been the market leaders, so the Mag 7, Bitcoin, Ethereum. But the broadening is really the financials, industrials, and small caps.
So you like them all?
Yeah, it's kind of cyclicals, AI and crypto, but not the defensives. Yeah, I mean, I think it's a really important moment happening this year with, the Genius Act, really greenlighting stable coins, and then Project Crypto, which is Wall Street moving on to the blockchain. I think it's a lot like 1971 when the U.S. dollar went off the gold standard. That created the innovation of Wall Street because they had to sort of essentially create this synthetic dollar. Wall Street moving on to the blockchain is a bigger moment, and I think that's why Ethereum is essentially having its 1971 moment equivalent. I'd say anytime something goes up, people tend to call it froth. I think they called AI a frothy trade now, but we know it has a lot of legs, and it's been taking place for a couple years. Keep in mind, Ethereum is also the place where when agentic AI comes together, when you have robots and you want proof of human, you want to make sure those commands come from a verified source. That's all taking place on a smart contract. A lot of it will be Ethereum.
Senior economist Jeremy Siegel of WisdomTree and professor of finance at Wharton added context to Powell's comments. Siegel, who is well known for his straightforward, data-driven approach to markets, emphasized how the Fed's more accommodating position would be particularly advantageous for stocks and small-cap firms. Powell's readiness to see past immediate inflationary pressures might lead to lower rates and more leeway for markets to operate. He added, even though some analysts are still apprehensive.
I thought it was very dovish, and I think the market reaction is perfectly right. Listen, small stocks doing so well is textbook. Small companies borrow at the Fed rate, at the Fed funds +1, +2. They are very sensitive to those short-term rates, which now we're going to go down. I wouldn't be surprised to see it 25 basis point in each of the next 3 meetings, down to the low 3s by the beginning of next year. I think it's appropriate. I've been saying that for quite a while on CNBC, that the short rate should be about 100 basis points below the long rate, and that does put it in the low 3s. And I'm not surprised at the reaction, and I think this means more upside for equities. Well, first of all, the Fed never forecloses anything for sure. It always does leave that option open. But it's the first time I really heard him say that the tariffs are a one-time increase, and implying that as long as that doesn't spread to other sectors, just, as Steve mentioned, that we should not be looking at that inflation and saying that that's one reason to tighten credit. I've often said, tariffs are like a tax increase. Monetary policy says you should not tighten credit when increased prices is caused by a tax increase. And it seems like pretty much he was on board with that notion. He hasn't seen inflationary expectations go up. My belief is that, the inflation data in the future may not be as important, particularly if it comes from core goods and from tariffs and imports. He'll be looking at the service side of it. And by the way, we know housing is a big part of that service side, and that's been very soft. We see that prices in homes across the country are finally softened to the point of going down, I think, in a majority of states right now. So housing, even though it does get in a lag in the CPI and the PCE deflator, doesn't seem like that big component is going to be a source of that service inflation. So I think that, pretty much that opens the door for those lower rates. And I think that's pretty much the way it should be. And obviously anything can happen, but the market wanted it, and they got it. And it was more clear than I thought he would be, like he was a year ago. The pivot a year ago, we saw a rate. Now, I don't know if it's going to be 50. I think 50 depends pretty much on what the August payrolls are going to be. If we got a negative print, it might be 50. But I think that 25 is certainly in a bag, barring some sort of crisis we don't foresee at the present time. And by the way, when we got those PMIs from S&P Global, that surprised on the upside. I think a lot of people said, "Whoa, Powell does have some ammunition to say things are not falling apart. I'm going to be data dependent." That did not deter him. I think that put a little bit more question. I think coming into the week, we thought, he's going to pivot, and some of the data actually was not that weak. We do not see the economy falling apart. We don't see crazy strength by any means. I think that Goldman Sachs and others think 1.5% to 2%. I think the Atlanta Fed thinks 2.5% for this third quarter. That's not a runaway economy. and with the supply of labor being restricted so much by immigration and other policies, as Powell mentioned, any diminution in demand is going to result in negative payrolls and rising unemployment.
After Ethereum reached new all-time high territory, Tom Lee recently expressed his excitement on X. If history is any indication, breaking to all-time highs is the beginning of a far larger upward move. He tweets, "The larger the base, the greater the breakout." According to market knowledge, for Lee, this was a sizable basis. Price action isn't the only factor here. For Ethereum investors, it's about the kind of momentum that might usher in a new era. Recently, Bitmain, an Ethereum treasury firm that has subtly established itself at the center of the ETH economy, appointed him chairman. Bit's approach focuses on keeping and overseeing sizable Ethereum reserves as a structural wager on the cryptocurrency, serving as the foundation of the decentralized economy rather than just an investment. This strategy has yielded significant results over the last 6 to 8 weeks. Bitmain's treasury approach amplified Ethereum's gains as it climbed into its all-time highs, solidifying the notion that institutional-style ETH holding is about more than simply long-term safety. It can be a forceful growth play. The growing institutional acceptance of Ethereum and the overall macroeconomic climate serve as the foundation for Lee's optimistic assessment of the cryptocurrency. By comparing the 2017 ETH to BTC valuation ratio, which he refers to as Ethereum's Bitcoin 2017 moment, he has hinted that Ethereum might reach $16,000. He has implemented a comprehensive Ethereum treasury plan in his capacity as Bit's chairman. Similar to how MicroStrategy established its Bitcoin position, Bitmain has amassed enormous ETH reserves very quickly. Lee thinks that this type of treasury move might eventually drive ETH toward $30,000, particularly if it becomes a corporate playbook throughout the ecosystem. Lee is still as optimistic about Bitcoin. He has reiterated his $250,000 year goal, which is supported by increasing institutional demand and positive liquidity trends. However, he hasn't started cashing checks yet. His long-term outlook is much more ambitious, predicting that Bitcoin may hit $1 million or, his most optimistic projections, an astounding $3 million, which would reflect the long-term digital gold concept and supply and demand imbalance. Do you concur with Tom Lee's forecast that September would be a very bullish month for cryptocurrencies, especially Ethereum, which he claims is experiencing its 2017 Bitcoin moment? Kindly share your thoughts and views in the space provided for comments below. In order to see more videos like this, make sure you like this one, subscribe to the channel, and enable post alerts. All of your actions support the channel's expansion and the YouTube algorithm. Thank you for viewing. Everybody from Tesla Hype, Lee Thomas, Ethereum Associated just uploaded.